let's bring in our next guest, and that's Bill Baruch, president of Blue Line Futures. Bill, thanks so much for joining the show.
Thanks for having me on again today.
All right, Bill, good to see you. All right, so I don't know if you just heard Scott, but he was talking about his outlook for Bitcoin. Still time to get in. Doesn't expect any huge breakout anytime soon, back above the highs. I'm just curious, heading into 2025, what your view on Bitcoin is. Is it time to get in? How much of your portfolio should be allocated to Bitcoin?
Yeah, we're optimistic, and we run a wealth program where a portfolio that's diversified among stocks, and we have about a 1% allocation to IBIT. I see that increasing as this year unfolds in 2025. Strategically look for a time to add. Maybe when it's convincingly higher, but maybe there's a dip that allows us to increase that position. Now, I also run a commodity fund known as a CTA at Blue Creek Capital Management, and it's more aggressive. So there we've utilized the CME's futures and options to take advantage of more of a trading pattern in Bitcoin, but leaning heavily into calls. Since this move here in December, although it's settled in a bit, we do think that the first part of January could be potentially aggressively higher if the right conditions. We could see 125,000. So we're trying to position for that with a risk-defined approach.
Okay, so at 125 as early as January. So you would say for those people with FOMO, there's time to get in on this dip.
Yeah, you just want to look at the 21-day moving average, which has helped guide some support. Look at the December low early in the month, and use those as some areas that have triggered to the downside. Doesn't mean the move is done, but you really need to manage your risk below there.
Okay. In terms of commodities, we had Carly Garner on just a bit, and she was taking a look at oil prices and said she expects we could see a move to the low 50s in oil, based on kind of the landscape right now. What's your take on oil?
It's hard to outright disagree with that because, traditionally in a Republican office, with President Trump coming in, they are talking about trying to increase more and add more production here in the U.S. Now, at 13 million barrels, it's hard to imagine, an increase in production very quickly. So I think maybe, if that underwhelms, we could see the market respond favorably. But overall, I mean, in a conservative or Republican office, you typically see pretty strong headwinds to sustained rallies in crude oil. Now, with that said, there's been a tremendous amount of support in the 60s, and we're somewhat optimistic here in the near term. I think there's a lot of conditions that really are more reliant on what OPEC is going to do, and are they going to bring back production, or are they going to keep production off? And then what is China do? Do we get the bazooka from China, or is it just continue to be chatter? Does that economy make a turn? And that's going to be the most important thing, I think, as we head into the coming months. We remain optimistic, but as I talked with Bitcoin just now, there's some levels to the downside that if triggered, you want to step aside, and that opens the door to what Carly Garner had mentioned, into the 50s. So we're strategically navigating that from the futures and options in our commodity CTA. But on the wealth side, we remain in this diversified portfolios of securities. We remain heavy in energy, 9 to 10% in energy. Now, with that said, we've reduced some of the more reliant names on the price of oil, like a Marathon Petroleum. We don't own anymore. Exxon is a name that we may reduce here in the next coming weeks. But there are some really great ways to invest in energy in the securities, whether it be like a name like Kinder Morgan. With higher production could bring more need for logistics and midstream. A name like Cheniere getting into natural gas, that's more reliant on the transportation of natural gas with some of the regulations that are going to change. So there's different places to invest in oil and trade oil and look at it, energy in general, rather than just saying here, if oil is going to go higher or lower. So we're trying to be optimistic in general, though.
Okay, so interesting insights there. Appreciate those picks, and I guess sell picks as well. In terms of your outlook for gold, what about that? Because we've seen strength there. Do you expect to continue to see strength? Is it a safety play for 2025, or more of what we've seen this year?
I am optimistic, and one of our commodity fund programs is a metals program, and we still remain pretty optimistic in the first half of this year. I do think seasonality that we could see, should see as January unfolds. I think is going to be favorable for gold and silver. I think it's been a tremendous year that we had in 2024. So I think the upside cannot repeat itself. But with that said, 2890, 2900 is a big level that we've targeted to the upside, and it really only stuck its nose above 2800. From there, silver has really, even it's had a tremendous year too. It obviously trades more with more volatility and more packs a bigger punch when it does move. So at times this year, it has outperformed gold, and silver has gotten hit pretty hard here at post Fed meeting in December. But I think January opens up a potential rebound. The seasonals continue to be favorable, and in the right conditions, I think silver would make a run to $40, and that would bring an overshoot in gold to 3,000. And I think that could complete a sort of near-term objective and maybe settle in a little bit as the year unfolds, and really relying on the growth path, relying on what President Trump does with tariffs. What does that mean for the Chinese yuan? What does that mean for other currencies against the dollar? Because at the end of the day, you have to remember that gold and silver and oil and these commodities, they're all priced in dollars. And if the dollar doesn't get derailed from these elevated levels, it's going to be a tough path to see commodities continue higher.
So, Bill, we're out of time, so I need a 10-second answer. But does the strength in strength in gold and silver come at the expense of the stock market, or can the stock market continue its run higher next year as well?
I think there's ebbs and flows, and we're going to see both track higher. But again, it's going to be very reliant on the U.S. dollar. What I will say and finish with is, in this first term, President Trump did not want to see a dollar that continued to rally. So I think, as everybody's fearful of the dollar rallying right now, wait, and maybe we'll start to hear some comments come January 20th on that suppress the price of the dollar.
Okay, we'll leave it there. Bill Baruch, President Blue Line Futures, thanks so much for your picks and for your insights.